Okay, let's get into it. I really wanted to hit on this video on why 99% of traders fail. And, that's a factual statement. Only 1% makes it, but we got to ask ourselves why. And I want to elaborate, on why that is, what to do, what not to do. And it's crazy, on the 17th of this month, it'll be 6 years for me trading in the stock market. So it's crazy how fast time flies. But I say that to say, I've been through my trials and tribulations and do's and don'ts. So I want to, share that knowledge with you. And one of the main reasons why I really wanted to hit on this is, I wish this was something, I saw early in my journey when I first started trading. Something that I've said, earlier is I believe that trading is hard because everything else in life, you have someone telling you what to do, what not to do, and showing you the way. And trading is not like that. You can practice bad habits and make money in the market. So that's why I believe trading is hard. Think about it. You go to school, you got a teacher. You go to work, you got a boss. You start a new job, you got orientation. I mean, the list goes on. You play sports, you have a coach teaching you technique. I mean, the list goes on. So that's one of the main reasons why I believe trading is so hard because you have no one telling you do's and don'ts. I hope that makes sense. So let's get into it. Very excited for this one. So, why 99% of traders fail and how can you be the 1%? It's you, not the markets. It is you, it's not the markets. Something you've heard me say before, and I'll continue to say it, something that Mark Douglas said is your success and failure as a trader is up to you. It's not the markets, it's on you. So if you are profitable, it's because of you. And if you're not profitable, it's because of you. So trading has nothing to do with being smart. Smarter does not equal profitable. Most traders don't make it due to psychological mistakes. No edge in the market, poor risk management, and the main thing that makes trading hard is we fight the things that makes us humans, emotions. And this is the uncomfortable truth. You don't need to know 2 plus 2 in order to be consistently profitable in trading. You don't need to know calculus and trigonometry and that correlates to the market. That's not true. That's a myth. I know some very, very smart people who has tried trading and it just didn't work for them. Most traders don't make it due to psychological mistakes. As we know, trading is very simple. It's very easy. Really, it is. Something that Mark Douglas says is trading is what you make it. It's very easy. And I'll explain it this way. This is my mouse, right? I hit buy market, I hit sell market. What's hard about that? You get what I'm trying to say? What's actually hard about that? So I think we all know trading is hard up here. It's hard up here. So most traders don't make it due to psychological mistakes. You know, no edge in the market. I can't tell you how many traders wake up every morning, they put on real cash on the line, real risk on the line, and they have no edge in the market. And then, of course, as we know, poor risk management, scaling up, scaling down, oversizing, full porting, chasing. I mean, all those things fall under risk management. And the main thing that we fight that makes us humans are our emotions. Hope that makes sense. And I think, we all can agree on that. FOMO, fear, tilt, revenge, those are all emotions. Those are all emotional mistakes. So, what separates winners from losers? And I really want to hit on this. They can think in terms of probabilities. They are great losers. They see losses as data, not as a loss. They control their emotions. Their emotions do not control them. They stick to their system and their rules every single day. They show up and do the same thing every single day. Rinse and repeat. Patience. They can show up and do absolutely nothing. And you've heard me say this before. I believe that this is one of the most hardest things for beginner traders to do is to show up and do absolutely nothing. Can you sit on your hands for 2 days, 3 days, and do absolutely nothing? But most traders can't do that because they want to make money quick. Remember, less is more. Now, thinking in terms of probabilities, you've heard me hit on this before. I'll hit on it again. If you are upset that you took a loss, it's because you expected that to win. So I'll give you a great example that Mark Douglas he says in his book, and honestly, it's pretty funny. So he says if you take $1 and you go to the casino and you put $1 in the slot machine and you lose that $1, are you upset? No, you're not upset because you didn't expect to win. You knew you weren't. So when you hit the jackpot and you won the trade, you're actually surprised. Why? Because you were not expecting to win. You see the difference there? So when he says that, I'm like, wow, that's actually a really good point. So when you go into a trade and you're just a sore loser and you revenge trade and you go on tilt, it's because you're thinking in terms of certainties, not probabilities. You got to understand it's a probability game. Having an edge in the market means that you have an edge that puts the probabilities in your favor over a period of time. Great losers. I've said this in my last video. I believe that I'm a great trader because I'm a great loser. No one can lose better than me. When I lose, I smile because I know my edge. I know my system. Every loss that I take puts me closer to a win. Control their emotions. You think these traders on Wall Street trading at the New York Stock Exchange is blowing up, going on tilt? Control your emotions. Don't let your emotions control you. If you feel the urge to revenge trade, if you feel the urge to jump into a trade because you feel like you might miss out, it may go without you, that's your emotions controlling you. Being impulsive, that's your emotions controlling you. The same thing every day. I promise you, I wake up and I do the same thing every single day. You know the difference between my winning days and my losing days? Absolutely nothing. The same thing that I did on my winning days is the same thing that I did on my losing days. Patience. I've learned a lot about myself when it came to trading and learning what patience means. See, I thought that patience meant I can stand in a line at a bank, no problem at all. No, that's not what that means. Very different in the stock market, and I think we all know that. So you got to have, patience. You got to develop patience. You have to work on it. And then the simple fixes, right? And it really is simple. Having an edge in the market, journal. We've already hit journaling, right? Journal, backtest, wins, losses, market conditions. Notice what you notice. Be mindful of your emotions and control your emotions. And then, of course, you have to learn to think in probabilities. That's why I always say, always think about your next 100 trades. As a beginner trader, you have a short-term mindset. You're not focused on your results at the end of the quarter, at the end of the month, at the end of the year. You're focused on, I got to end the day green. I got to end today green. Having an edge in the market first, this is one thing that I really want to hit on. There's so many YouTube videos out there, and it's very frustrating, where they're telling you you need to focus on psychology first and risk management. No, 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 no. The number one step that you need to do is have an edge in the market. I can't tell you how many traders do not have an edge in the market. So number one, know what your edge is. Are you a breakout trader? Are you a retest? It doesn't matter. When you going through that process, it may take you time. It may take you months. It may take you years, because you have to find an edge in the market that fits your system. One of my best friends, he's a great trader, very big trader. He trades a lot, like with very real size. And I said to him, how come you don't swing trade? Like, well, why is that? And he says to me, I don't swing trade because I like my sleep at night. And I laugh, but I understand what he means. It doesn't fit his personality, so he doesn't do it. So when it comes to finding and having an edge in the market, you have to pick a system that fits your personality. After you have an edge, number two is risk management. Number two is risk management. We've already talked about this, keeping your position size in the same, right? Less is more. Everything falls under risk management. And then three, work on the psychological side of things. So these are what new traders do. No strategy, just vibes. They just wake up, they trade, fingers crossed, hope for the best. So this is a main one. Random entries. Enter in a trade because it looks good. No analysis behind entries. No thesis behind each trade. Chasing momentum. No pre-market plans. Taking trades off of every single level. This is a very big one, right? All of these equal vibes. This is all the above. You're just hoping to get by. You're just hoping to win the day. As I said, there is no such thing as hope in the market. And this is what a lot of beginner traders do. Oh, it looks good, so I'm going to take my shot. Have you built an analysis? Do you have a game plan? What is your analysis breakdown? I should be able to ask you that, and you should be able to tell me that. Do you think the traders on Wall Street and these big profitable traders, they're just waking up in the morning and crossing their fingers? No, no, no. They're putting in a lot of work and a lot of hours to build an analysis behind their entries. Why? We went over that in the last video. You got to know your why. No thesis behind a trade. Every time you hear me, in my trade, I say, hey, as long as price is above or below the key level that I'm risking off of, my thesis is correct. If I'm taking a break and retest off the key level to the upside and it sets up and I take it, my thesis behind that trade is buyers is going to push this price higher if we reclaim this level. That's my thesis behind the trade. And as long as we're above that key level, my thesis is correct. If we fall under that, I get stopped out of my trade. Why? Because my stop loss hits, which means what? My thesis was incorrect. Chasing momentum. This is why you got to find your sweet spot. Like I've said in the past, and I'll continue to say, there's no right or wrong way to trade. For me, the 1 minute time frame, it's a no-go. It's a no-go. It's too much, because the candles look bigger than what they actually are. If you've been with me for a while, hey, I'm trading on the weekly time frame, on the daily time frame. I'm just using a smaller time frame for my entries and exits. So this is a big one. Market opens, we get a tank to the downside, and you think it's bearish on the day, and you just go short because we break through the lower day, or we get a 5-minute ORB, but we're trending to the upside. So chasing momentum is a very big one. I used to do that as well, not knowing exactly what I was doing. No pre-market plans, just coming into the day, 20 minutes, 10 minutes, waking up before market opens and taking shots and hoping that they stick. And then less is more. I've already broke down in a separate video. I want you. This is something I want you to do. I want you to mark out your pre-market high, low, previous day high and low, 5-minute high and low, 15-minute high and low, and then just look at it. Everything looks like a trade. Everything looks like a trade. So taking trades off of every level is practicing bad habits, because it all looks like a trade. Less is more. Chasing, going long because of rally on the intraday, going short because of sharp drop on the intraday, and seeing quick moves happen triggers your FOMO. This is very common for most traders. The fear of missing out. Oh man, we just opened up and we broke through the previous day high. This thing's gonna keep going. I don't want to miss out. Not knowing that, hey, on the weekly, on the daily, we're bearish bias. We're trending to the downside. This is very common. Just chasing trades, chasing momentum, hoping that it works in your favor, and it goes with you, not against you. That's a big one. FOMO is very real. How do I know this? Because I went through that as a trader when I first started off. No criteria for entries and exits. Letting FOMO control your entries. Exiting trades due to P&L and not market structure. Right? Does not know what it means to skip a trade. I really want to hit on these three things because they're very important. You are letting the fear of missing out control your entries. See how all these things fall under, psychological mistakes? It's all mental. Control your emotions. Don't let your emotions control you. The fear of missing out and taking a trade based on that's your emotions controlling you. This is a very big one. I really want to hit on this. Exiting trades due to P&L, not due to market structure. I let the market tell me when to exit my trades. I do not set profit targets. I've already said I can't control how much I can make in a trade, but I can control how much I can lose in a trade. Our two main jobs as a trader is to control our risk and our emotions. Do you think traders on Wall Street, right, on the New York Stock Exchange floor, they're just, I'm up like 10%, so you know what, I'm just going to get out here. No, no, no. That's not how that works. You can trail your position, whatever the case may be. The worst advice, and this is so common, that I've seen is see green, take green. How many of us has heard see green, take green? That is terrible. How many of us has been in a trade? You saw how much your unrealized gains were. You ended up selling because you don't want to lose that, and then it ends up ripping in your favor even more, and you left so much on the table. That's you letting your emotions control you. Whether you know that or not, that is an emotional decision based on fear. You may think, oh, today was a green day. I made a quick $100. No, you didn't trade your plan. You traded your P&L, not your chart. So this is a very big one, and you got to ask yourself, are you guilty of this? I used to do that. I can't tell you how much money I left on the table in my career due to exiting trades by looking at my P&L and not based off market structure, and does not know what it means to skip a trade. As you always hear me say, there's a difference between skipping a trade and missing a trade. Skipping a trade is you believe it's not worth the risk. I'm not going to take a break and retest on AMD that technically sets up, right? On a technical standpoint, it's set up. I got a break and retest off a daily level, but the overall market is pushing into a key resistance level. I'm not going to take that trade. Why? Because it's not worth the risk to me. Because why would I go long on this name if I'm not spotting any divergence against the overall market and the overall market is pushing into a key resistance level? I hope that makes sense. So you got to know, right, when to skip a trade versus missing a trade, and then it feels right. This is a big one. There are no fill-ins in the market. There's no such thing as fill-ins in the market. This is why I say, right, we are doing the very thing that makes us human. It's fighting our emotions. Our emotions makes us human. Butterflies, right? I'm sure you've all gotten butterflies in a trade prior to getting into a trade and after a trade. Your heart rate goes up, your pupils are dilated, right? But there's no fill-ins in the market. We are creating that. The market's not creating that. We are creating that own fear or that own adrenaline in our own heads. That's us doing that. The market's not doing that. So, there are no fill-ins in the market. There's no such thing as a gut fill-in. I'm never taking a trade due to a gut feeling. You know what I mean? You can't. There's no such thing. The market doesn't care what your gut is telling you. And hope and prayer does not work. Let me tell you guys, I'm a spiritual guy. I believe in God. And I've had a lot of trades early in my career where I've said prayers while I was in that trade. Those prayers did not work. So hope and prayer does not work. But if you don't have a repeatable system, you cannot be profitable. If you don't have a repeatable system, you cannot be profitable. I promise you, I am not being arrogant or cocky when I say trading is easy. I'm not, because I've been in your shoes. But when I say that, what I mean is I show up and I do the same thing every single day. It gets boring. Trading should be boring, right? Before you enter a trade, if your heart rate is through the roof, that's not a good thing. We've hit on that. If the trade is going in your favor and you're seeing green and your eyes get big, that's not a good thing. Trading is repeatable, systematic. Do the same thing every single day. So once you get to that point, you'll realize like, okay, cool, my emotions are no longer involved, and I'm starting to see some profitability in my trading. This is good. Let's keep it that way. I've said in the last video, I think it's worse when a trader is on a winning streak and they're just very happy, because as soon as that streak ends, they crash and burn. I see it all the time. So once again, you got to have a repeatable system. I promise you, every consistently profitable trader, they are doing the same thing every single day. So, and this is a fact. This is a fact. You can research this yourself. This is the number one reason why people don't make it in trading, and we all shouldn't be surprised when we hear this. Risk management. That is the number one reason why most traders don't make it, is risk management. So let's get into this. So zero risk management. What falls under risk management? Almost everything. Oversizing, over trading, chasing, trying to make it back. Guys, 9 out of 10 things that I'm teaching you and telling you, you'll realize that all of that falls under risk management. Trading your system falls under risk management. Keeping your position sizing, journaling, all those things falls under risk management. Skipping a trade falls under risk management. All these things fall under risk management. Less is more, risk management. So you'll realize that trading, all of trading really is risk management. It is our job to protect our capital. It's our job to protect ourselves. So you have to understand that risk management is what's going to keep you alive in this game. That is the main thing. An analogy that was given to me by an old friend of mine was, treat your capital like a baby when you're a beginner trader. What do babies do? If you nurture them, you feed them, they grow, right? They get bigger, right? Treat your position sizes like that. Treat your capital like that. Small steps, small steps. I promise you, your position size, it will get bigger. It will get bigger. A lot of traders have this, this misconception that, oh man, if I had a bigger account, it'd be easier to make money. I swear to you, that's not true, because I used to think the same thing. Trust me, it's a good thing that you have a small account when you're going through the learning phase, because one, you will lose, and two, it's a factual statement. If you can't trade and manage a small account, you can't trade and manage a big account. So you got to ask yourself, do you really think that you'll automatically just be a better trader when you have 100K in your name tomorrow? No, if you can't manage a small account, you can't manage a big account. It's the same thing. It's all perception, right? 10% is 10%. It's the same trade. So that's a very big mistake that a lot of traders, believe. Because I was that trader too. I used to think, man, if I just had a bigger account, it'd be easy to make X, Y, and Z. That's not true. If anything, it's just a faster way to crash and burn. Oversizing, not keeping position size in the same. We've covered this, and this is a very big one. It's going to be very hard for you to be consistent if you don't have an average. You have to keep your wins and losses the same. Even if you're losing, you got to keep it the same. You can't be on a losing streak and then one day it's 3,000 and one day it's 300 and then one day it's 600. So keeping position size in the same is very crucial for longevity. I can't stress that enough. Scaling up because now it's an A plus setup. This is one of my biggest pet peeves in the trading space. I've said this in the past, right? Something that I want you to do. And studies show that if you write something down, you are more likely to remember it. I want you to get out a piece of paper. I want you to write down the definition of what an A plus setup is in your system. Only you know that. What is an A plus setup in your system? And then I want you to look at every single trade that you've taken, and I want you to notice, does the definition correlate with the trades that you've taken? If it doesn't, why did you take it? So this is something that I really disagree with. Scaling up because now it's an A plus setup. To each their own. For me personally, when I see something like that, my first question is why are you taking the trade if it's not an A plus setup? Less is more. I'm going to sit on my hands for 2 days, 3 days until I get an A plus setup. So this one is so big. You know, a lot of traders you hear, hey, I'm going to actually scale up because now this is an A plus setup. So what were the last other trades? Your last three weren't A plus setups. Well, why are you taking those? So to each their own. But that's something that I really want to hit on. Like, keep your position size in the same. Every trade that I take, in my opinion, in my book, is an A plus setup. I know what I'm doing. I know what I'm looking at. Scaling up each trade to make their last loss back. When you do this, you're not thinking about your next 100 trades. You're not thinking about the longevity. You're not thinking about your performance at the end of the quarter, at the end of the month, at the end of the year. You're thinking about today. You're having a short-term mindset. It's going to be very hard to make it when you have a short-term mindset. Stop losses. Not respecting your stop loss because it will come back. How many traders have done that? You can't accept the loss. You can't let go of it. That's being a sore loser. And the longer you do that, the quicker you lose money. Hope. We've already covered this. Oh, I hope it comes back. There's no such thing as hope. Add into your losing positions to try and balance out the average. And then it ends up keep going against you, and now your loss is bigger. I'm just going to give it a little bit more room. How many of us has told ourselves that? You know what? The market's pushing, but this thing is still pulling back heavy. I'm going to just give it a little bit more room. And then a little bit more room. Now you're down 30%. Now you're down 40%. We've been there. I've been there, right? So consistent traders master risk, not prediction. I promise you one thing. All the consistently profitable traders, all the traders on Wall Street, their risk management is tight. They are not doing any of these things. They're not oversizing. They don't come into the market and say, you know what? I have really good sleep. My gut's telling me something. I'm going to size up today an extra 5 million to go long on the SPY. I promise you that's not the case. They're respecting their stop losses. The sooner you become a great loser, I promise you the quicker you'll be a consistently profitable trader. That is a fact. So emotional traders. This is a very big one. Emotional traders. So the 4 killers for amateur traders. This is very big. Fear, FOMO, greed, and revenge. Pro traders, no emotions. They're not taking trades based on emotions, right? They're not revenge trading because, oh man, I lost today. I got to make my money back. No. FOMO does not exist because they stick to the system and they trust it. Something you've heard me say. I trust my edge. I trust my system. I trust myself. I know that every single loss that I take that is a part of my system puts me one trade closer to a win. It puts me one trade closer. So I smile when I lose because I know, hey, I lost today, but when I win big. So that's fine with me, right? Pro traders, they know when to cut their winners. They don't hold on and hope to make more. They don't hold on and hope for it to come back. This is a big one. You know, over trading. You're in a winning trade. Oh, but man, I lost like 3 days in a row. This thing's going in my favor. Let me just see how far it can go. No. Pro traders, when they get a big trade in their move, they're trailing their position. They're trailing it with a stop loss because now you're in a trade that's risk free. It can no longer go red against you. You scaled out, you de-risked, you're moving your stop loss. So if it goes against you, you make money on your trade, you go about your day. They don't revenge trade. They don't take a loss personal. There's no such thing as personal in the market. That's a very big thing. If you revenge trade and you have impulsiveness kick in, that is you letting your emotions control you. You got to understand that if you do that, you're taking that loss personal. I've been there. I've said to myself, right, man, I did everything right. I put in all the hours. I'm sacrificing my weekends. I feel like I'm doing everything I'm supposed to do, and I keep losing. It's not the market. It's you. Less is more. The more you study does not mean you're just going to become consistently profitable. And that's why I always say, you know, what Mark Douglas says, something that I really do agree with, is your success and failure in the market is because of you, not the markets. So I've had that victim mentality early on in my journey. Like, what am I doing wrong? That was the main thing I was doing wrong. I was taking it personal. I wasn't thinking in terms of probabilities. I was thinking in terms of certainties. So fear, right? These are the emotional traders. Fear. They're scared of losing a trade. Man, I'll tell you guys one thing. Ever since I've kind of got into the public space of trading and the emails I get, the main thing that I've learned, the main thing that I've learned, and I do understand why only 1% makes it, is because everyone wants to reward but no risk. Everyone's looking for the golden system. Everyone's trying not to lose. Everyone wants to put on very little size and expect very big gains. I mean, the list goes on. This is a very common one that I get a lot, that I see a lot, that I hear from my other friends, right, who trades, and they have people asking them for advice. Trust me, that's one thing they don't tell you when you start to become, you know, a bigger trader and you do it full time. you start hearing from family members you've been heard from in years. So that is a factual thing. And every trader wants the reward, but no risk. I keep having people ask me, okay, but how do I know when to enter? Like, how do I know? You don't, dude. If your setup occurs, you take your shot. Win or lose, you go about your day. That's why I've said I can't judge your performance as a trader based on wins or losses. It doesn't make sense. How can I judge your performance based on a random outcome? Winning and losing a trade it's a random outcome. I judge your performance based on following your rules, being disciplined. That's where you become consistently profitable, having an edge in the market over a period of time. So scared of losing a trade, every trader wants to reward, but no risk. Scared of losing unrealized gains. They look at their P&L and L and they sell for no reason just to lock in gains. See green, take green. This is very common. A lot of traders, oh man, you know what? I'm already up 10%. I already lost yesterday. You know what? Let me just lock this in. I'm out. So be it. And then it runs, and then you're trying to figure out how to grow a small account. But dude, you were just in a 40% trade, but you sold for 10% because you peeked out your P&L and you were scared to lose that unrealized gains. That's why you hear me say, dude, as a new trader, don't look at your P&L. Set a profit target, set a stop loss, and don't look at your P&L. Let the probabilities play out. The longer you hold on to fear, the longer you will not make money in the market. FOMO. You don't want to miss the move, even though your entry criteria did not occur. How many traders do this? Right? The break and retest, you get a big breakout. The breakout's so big, you feel like it's not going to come back for a retest. You end up going long on the breakout. It actually pulls back on the retest and it stops you out on the retest. That's a very big one. The impulsiveness takes over. You get a big breakout and you're afraid it won't come back and retest it. I see it all the time. I have plenty of live trading sessions where we've waited over an hour for our retest to occur. We took our long and we made money on our trade. Trade your system. Know your entry criteria. As you always hear me say, the number one um, entry criteria for the break and retest is displacement. That's the number one entry criteria. It's not the breakout. No, it's displacement. Waiting for the candle to closure. I'm sorry, waiting for the candle to close. If you have FOMO, you don't trust your system, you don't trust yourself, and you do not control your emotions control you. That's a factual statement. If you have fear of missing out, you don't trust what you're doing. You don't trust what you're doing. Greed, very common. This is 90% of traders. Most common, they want to get rich quick. Rick, my apologies. Trying to hold a winning trade forever and just hopes it run. That's so common. The analogy I gave you last time was school, right? School was a great analogy. We go to school to high school for 4 years to get a high school diploma. You go to college for 4 years to get a bachelor's degree. Why does trading have to work in 4 weeks, in 4 days, in 4 months? Give yourself that same amount of time to actually make it in the stock market. So a lot of traders come in and they just want to make a quick buck, not realizing that you're gonna crash and burn eventually. Over trading and putting on too much size so you can make a quick buck. That's so common. You know what? What if I just full port and I get like a quick 6%? That's like $600 in a day. You're thinking about the outcome of the trade. You're thinking about winning the trade. You're not thinking about risk. That's very common. Putting on too much size. So hey, the more money I have, the bigger the return, right? That's what a lot of new traders think. That's not true. More size does not mean more money. More size doesn't mean it's easier to make money. That is a very false thing that I believe is a myth. A lot of traders believe that. I don't know where it comes from. I don't, because I was that same guy. Maybe because we look at these other traders who make large sums of money in a day and we know it's with a big position size, maybe, but that's not the truth. Greed doesn't end well in all aspects of life. So why would it in trading? You got to ask yourself that. Revenge trading, sore loser, took a loss personal, so you try and make it back. That's your emotions controlling you. Thinking in terms of certainties. Oh man, I should have won that trade. I did everything right. The market owes you nothing. The market owes you absolutely nothing. You think if you go into the market and you trade and you just lost your dog, S&P is going to be like, hey guys, let's take it easy today. He just lost his dog. Like, no, the market owes you nothing. So thinking in terms of certainties and expecting to win a trade, feeling like you should have won a trade, you're setting yourself up for failure. The best loser wins. Learn to be a great loser and you will win more. That is a factual statement. I promise you, all the consistently profitable traders, all the big traders on Wall Street, they are not sore losers. They don't blow up. They don't take a loss and say, you know what, I'm going all in to make my money back. They can go on losing streaks, right? Go watch one of my weekly recaps, I think from last month. I went on a 9-day winning streak, which just followed up by a 3-day losing streak. Did I go on tilt? Did I overtrade? Did I try and make my money back? Did I try and keep my streak alive? No. So pro traders, big traders, they don't do that. They are great losers. In order to be a great winner and to be a big winner, you got to be a great loser. It goes hand in hand. So how to become the 1%? Like, we got to hit on these things. Have a plan. Have a plan. So following these steps is how you turn trading into a profession, not gambling. Once you get to this point, you understand trading is easy. Why? You're doing the same thing every single day. When I say trading is easy, I'm not being cocky, guys. I promise. I'm not being arrogant saying, I've been doing this for X, Y, and Z. It's easy. No, no, no. I say it's easy because I'm doing the same thing every single day. It's boring. It should be boring. It's not good if your adrenaline's pumping. It's not good if you're excited that you had a green day. It's not good if you're mad that you had a red day. Rinse and repeat every single day. Once you treat it like a profession, right? You start to make money in the market. So one setup, stick to one system. Stick to one system. The traders on Wall Street, they have more than one system. Once you learn that system, then you can expand your playbook. Then you can incorporate, okay, today looks like the market conditions are for breakouts. The market conditions are for swing trading. But until then, you need to stick to one system. Whatever it is, perfect it. Learn the pros and cons to it. I keep telling you that. For me, I know the pros and cons to my system. Channels, consolidation, low probability environments. Rep it, learn it, know it like the back of your hand. I should be able to give you a blank sheet of paper and you should be able to write down your entire system by heart. You should be able to do that. Know it like the back of your hand, and then you know what you do after all these things. Rinse and repeat. Every day, rinse and repeat. The traders that are losing on a consistent basis, they are coming into the market, and they're saying, hey, this system doesn't work, next. This system doesn't work, next. You got to give it time. You got to give it a quarter. You got to give it a year. You got to journal these things so you can get accurate data. Less is more. Focus on quality. More does not mean more money. More trades does not mean more money. More money does not mean more money. I hope that makes sense. Focus on your setups and when to take them. Take them when they show up. That's so important. Don't just come into the day and it's like, hey, you know what? I got the breakout here. I didn't fully get a retest. So you know what? It's all good though. I'm gonna give it a shot. You're practicing bad habits. Take your setups when they show up. Don't force them to show up. Don't draw all these key levels and you think that this is a setup. No, it's not. And focus on one quality setup. Less is more. Quality over quantity. I can't stress that enough. I promise you, the new traders that's coming in and they're coming in taking 10 trades in a day, 5 trades in a day, 6 trades in a day, trying to make as much money as they can in a single day. Less is more. I said this in the past, I'll say it again. I started making a lot more money when I started trading less. That's a factual statement. I already know my average. On average, I take about 2 to 3 trades a week. The average really comes out to 3. If I take 4 trades in a week, it was a really hot week in the market. But my average comes out to 2 to 3. Journal, data, track every trade, win or lose. Why? We hit this in the last video. You got to know your why. Why did you win that trade? Why did you lose that trade? What were the emotions you felt in that trade? Did you feel happy, sad, mad, impulsive, frustrated? You got to know the why. You got to journal these things. The traders that's coming in today, opening a broker account, putting in all their savings, trying to make a quick buck, they're not doing these things. They're not. They're not practicing risk management. They're just focused on, oh man, how much money can I make? We've all been there, right? You pull out the calculator, you do the percentages, and it's like, man, if I can do this, I'll make X amount. I've done that too. I've done that too. It doesn't end well. It doesn't end well. Trading is you got to go with your average. Trading is not linear. It's up and down. For me, I know my average P&L on a month. I know my average P&L on a year. Since I've been doing it full time, my months has increased a lot, but still, right? You got to know your average. But the new traders, they're not doing this. They're not tracking their data. They're not journaling their mistakes. They're not focused on their emotions. They're not doing any of these things. We've already hit on risk management. That's the number one reason. Look it up yourself. That's the number one reason why most traders don't make it. Most retail traders don't make it. It's due to risk management. And then lastly, execution, now outcome. Learn to think in probabilities. I know when I'm in a trade, because I've gotten some questions on this. This confuses some people when I'm in a trade and I say, guys, whatever's going to happen is going to happen. I don't care if I lose. It's not my job to be right or wrong. That may sound crazy to someone. Like, what do you mean you don't care if you lose? What do you mean? Whoa, whoa, whoa. But if you understand, learn to think in terms of probabilities, whatever's going to happen is going to happen. My job is to control my risk and control my emotions. Whatever else happens when I enter a trade is out of my control. Like I told you, right? If you enter a trade with a 0 DTE, you're automatically starting at a disadvantage. Why? Because you have no idea what's going to happen when we enter a trade. I can enter a trade on a break and retest, and as soon as I enter, it can chop. I can enter a trade on a break and retest, and as soon as I enter, it can tank. It can rip to the upside. We don't know. If I knew the outcome of a trade, I'd be the richest person in the world, right? You get what I mean? So learn to think in terms of probabilities, not certainties. Don't focus on winning. Focus on execution. It's not your job to know. It's not my job to know if I'm going to win the trade or not. My job as a trader, Markel, is to take a high probability shot. That's my job. Whatever happens after that is out of my control. Detach. The traders who win daily are not attached. They don't marry a bias. Even though you hear me say, hey, we're bullish bias, we're bearish bias, but I'm reading the context. If the overall market's pulling back and I get a break and retest to the upside on Tesla and there's no divergence, yeah, I'm bullish bias, but I'm not just going to take that trade because I'm bullish bias, right? Context matters. So detach. I am detached from a trade. I'm detached from the outcome of a trade. It's not my job to know. So detach. And this is hard. I really want to hit on this. I know this is hard, right? I don't want to be naive. I'm not being naive. I understand. It's hard to be detached when you're working 8 to 10 hours on your feet and the money that you're making, you're putting into the stock market and you're trading with it. And you need this to work. Like I understand. That's very hard to do. Easier said than done to detach. But what's the number one rule to trading? Don't trade with money you can't afford to lose. Start off with one contract. So be it. You're just trying to practice good reps. You're trying to practice good habits. Statistics show it takes 40 days to actually develop a good habit, to develop a habit. It takes 40 days. So it goes hand in hand. right? You got to detach. My average days, my average winning days when I was in college was like $20, $30 days. And it was a really good day if I made anything over $70. Rome wasn't built in a day. My first winning trade was Google for $5. I swear to you, to the upside. I remember it like yesterday. So, you got to crawl before you walk. Be comfortable with your position size and be comfortable with yourself. You got to be comfortable at least with that. So, this is up to you. This is a case by case on what it takes for you to detach. Scale down. Go in with one contract. Trade with $1. It doesn't matter, right? You got to focus on that because it's going to be very hard to make it in this game if you are just so attached to every single trade you take. You are so heavily invested and attached to every single trade you take. So I hope you're able to learn from this. I hope we hit on a lot of things, right? Screenshot this, write this down. This is a big one. One system, one setup. You need to stick to it and rinse and repeat, rinse and repeat, rinse and repeat. The consistently profitable traders, they're doing the same thing every single day. That is a factual statement. So hope this helps, right? I appreciate the love and support. I hope you guys are able to learn from these videos, gain some knowledge from it, and learn from my mistakes. I'm sharing with you my mistakes, my trial and errors, my do's and don'ts, and what I did to get to where I'm at today. So once again, right, appreciate the love, support. Please don't forget to like and subscribe, and I will see you guys on the next one.